Greetings, members one and all of the Salivation Nation. In this present crisis, what are the two things that could cause silver prices to skyrocket? Let's explore! Yes, indeed. You know, it's not only in this crisis, but it's pretty much fundamental and universal. And that is a supply squeeze that could cause prices to skyrocket, but also demand for silver. And really, a supply squeeze could cause a lot more demand for silver. And I'll talk about that here later. But this is an article that comes to us from Kitco.com. It was an interview. I haven't really watched this interview, but I want to note some things about this interview with Keith Neumeyer, who is the CEO of First Majestic Silver. And, you got to take the source into account. And Keith has been criticized for being overly bullish on silver. Well, it's the business he's in, so obviously he's going to promote it. So take all this for a grain of salt. However, I will say this, that he is true on some of his numbers here. The global pandemic, which has shut down several mining jurisdictions around the world, taking off a large chunk of silver production, this according to Keith Neumeyer, the CEO of First Majestic. In 2018, we produced as a global industry 855 million ounces of silver. So far, we've had Peru come offline with 145 million ounces. We've had Chile come offline with 42 million ounces, and we've had Argentina come offline with 26.5 million ounces. That's a total of 213.5 million ounces that has now been shut down out of the 855 million ounces that they produced by 2018's measure. Neumeyer noted that there exists a fundamental disconnect between the physical market and the paper market for silver. And that's very true, we're seeing these days. In fact, anecdotally, my local coin shop is now quoting gold and silver price futures instead of the actual spot price for gold and silver. And that's what they're basing their numbers from when they sell. Neumeyer noted that there exists this fundamental difference. The miners to see the metal silver prices to go down to 10-year lows is a pretty tight market. It just goes to show you that the paper markets are just complete fallacy, he said. It's got nothing to do with reality. And, on the surface, it might seem a pretty bold statement, but, and I wouldn't go as far as to say it's fallacy because, it's obviously is affecting, especially if you need to sell silver, though many LCSs and even some bullion dealers are paying above spot price now, but the spot price is so low that it is affecting people's bottom lines when they have to sell their silver. You think about it. If silver is trading at $12 per ounce, which it's not anymore, but it was a couple of days ago, and a local coin shop is willing to give you $13 for it, but yet you paid $17 for it, you're taking a pretty big hit. So to say it's a complete fallacy, well, is a complete fallacy. Because the bullion dealers do use spot price from which to gauge their purchases. Now, they are paying more than spot price for it, which means that it's obviously we're working in a different world, but they're basing it off of spot price. So it does have something to do with reality. Not everything to do with reality, but it does have something to do with reality. Just want to keep everything balanced in those terms, because the paper, silver, and gold prices, they are in a sense, not really the basis or standard for what is interpreted as value, but they're used as a gauge in terms of that. But as my LCS is notes, and probably some other places too, starting to use the futures market rather than the COMEX delivered LBMA spot price for gold and silver to be able to gauge these numbers. Very interesting indeed. We live in a world where even the buying and selling are operating off of different numbers, but still And it is fascinating. He added that the recent decline in silver prices was purely financial and nothing to do with the changing supply and demand fundamentals. Now, that is true. It was a financial move in the markets where traders that are operating in the paper markets, some of them, many of them probably have never held an actual ounce of silver or gold in their lives, but yet, are hedging the markets with gold and silver ETFs. They're selling those to get cash positions on their markets to pay off their losses or whatever, and trying to get out of the markets. They're going to the safe haven of cash in that world. For you and I, we stack the physical precious metal, and this metal that we hold in our hands, it really is largely unaffected by those worlds in terms of the buying and selling, because we have premiums we got to take into account when we go to buy them, and what we lose when we go to sell them. So there are protections that you have in the paper markets that you don't have in the physical markets, but in the physical markets now, we're seeing some protections that we're not seeing in the paper market, such as dealers giving you over spot. But I think those worlds are going to come together or closer together soon, especially with the rising spot price. We'll look at the metals here momentarily. And he goes on to say it's purely financial, people having to sell paper, people having to short the metal because the markets are dropping, and nothing to do with the physical market at all. It's a very tight market, and now you can't buy any metal at all. And people weren't able to take advantage of those low prices in the market because of this high demand, because of that. And of course, the supply is tight from all manner of form, and not only that, but even the silver that's flowing into the industrial sector, a lot of those places are being shut down now because of the coronavirus, and of course the lack of economic activity tied to it. And so we definitely shall see exactly how that plays out. So let's take a look at the silver prices right now and gold prices and everything. Gold is down. Actually, this is very unusual that gold is the only metal that's down right now. All the other metals are up. Gold is down 1.41%. Silver is up 1.15%, up 17 cents. Comfortably above $14.50 an ounce right now. Platinum is up 3.95% to $741. Makes me thankful that I bought the couple ounces I bought when I bought them. But palladium took a huge jump upwards, a huge leap now, $2,430, up 21%, $406 increase. The only metal to top that out is rhodium. Rhodium, the metal of champions, right? And there we go. It's crazy. Look at the ask price on that. Look at the change. 50% increase, $2,000. Wow. It's on the day there, $9,000 to the ask price. But we have the widest spread ever. Look at that. Spread it like butter. $6,000 is the bid price. $9,000 is the ask price. $3,000 difference. In other words, if I was to try to sell my rhodium bar now, I would be hard-pressed to get bid price for it. More likely $5,000, maybe $4,000. Still come out ahead. Not going to sell, though. Different subject. But going back to the second thing that's going to cause the price to go up for silver to skyrocket, and that is demand. So you have the squeezing of the supply, which means that people that are trying to get silver normally are going to have a hard time getting it. The prices can go up for the normal demand, but then there's going to be investors out there that are going to want to pick up a whole lot more silver. Yes, indeed. In this present crisis, with the massive silver price drops, it triggered a rush to buy in India. And so this is interesting indeed. This came out a couple days ago. A recent plunge to silver to 11 years lows has awoken strong Indian demand for the precious metal as low prices present a not to miss buying opportunity, according to NTLFC Stone. Earlier this week, prices tumbled below $12 an ounce, with May silver futures last trading at $12.25. Of course, now it's up a little bit, and partially probably because of their Indian demand. And It's causing the price to go up even in the paper market. Silver has continued to slither lower, hit by the dual adverse effects of lower gold and debilitating economic outlook, said Intel FC Stone's head of market analysis for EMEA and Asia regions, Rana O'Connell. The dramatic fall to silver to 11-year lows has launched a rush to buy silver in India, the world's largest silver consumer. And that's something maybe people don't think about it. They are the largest silver consumer and probably the largest gold too, especially per capita. And the data comes from the firm's Dubai office, which is watching the physical silver demand in India. Last year's rise in gold and silver prices in local currencies led to a slump in silver demand for gold and silver. There has been very little interest in either gold or silver for months in India, which means there is bound to be pent-up demand, O'Connell told Kitco News on Wednesday. And with the recent drop in prices and even the COVID-19 pandemic, doesn't seem to be stopping shoppers from taking advantage of decade-low silver prices. Lots of demand very recently for silver. Sometimes something is just too good to miss, O'Connell noted. Gold price, even with the weaker rupee, are at 3-month low, while silver is an 11-year low. It brought people out of the woodwork. India is the largest consumer of silver, she pointed out, noting that it is responsible for about 20% of the world's jewelry, metals, and silverware market combined. Amazing. Silver is also seeing renewed retail demand out of the West, especially when it comes to silver coins, she added. It's good news. U.S. Mint announced 2 weeks ago now that it temporarily sold out of American silver Eagle bullion coins. Our rate of sale is just the first part of March exceeds 300% of what was sold last month. We actually talked about that and all that with the silver, with the Eagles there. But there you go, the two things that will cause silver prices to skyrocket. And I think that all of the things are in place. And as of today, even with the quote good news of this massive $6 trillion spending stimulus package, it's really inflating the stock market to go up. But what will that be? We're kicking the can down the road, and there are other aspects of the economy that very well could have a role in this as we could continue to struggle with this and places continue to be shut down. You can put all the stimulus you want into the economy, but if you're not producing the silver and supplies are tight, because mines aren't mining because of the COVID-19, prices of silver could still skyrocket even in an inflating stock market, because if there's a demand for the product, either it's going to be for industrial use or it's going to be as investment grade bullion. We'll find out. We'll see how it plays out, but I think the triggers are there for it. And so there you have it. I would encourage you, if you are looking for a bargain or find silver at a good price above the paper spot price, to go for it if your budget allows. I think that's really the best opportunity to come in and lower your dollar cost average for silver. But otherwise, don't overpay for silver either. If you're seeing Eagles out there for, double spot price or what have you, just hold off. Just wait a while. Wait for those numbers to come back, even if it means a risk of a climbing spot price and those numbers narrowing, where you may not save a whole lot, but if you can save a little bit, that's better than none. There's times to buy and there's times not to buy, and that's what I'm kind of referring to. With all that said before, I continue to feel for those who are struggling right now, and pray for those who are affected either directly or indirectly by the COVID-19. If you have family or loved ones who are incredibly sick or who have passed on, my prayers are with you as we deal with this unprecedented event. And so hang in there. I'd like to extend a multitude of gratitude to you all for watching and encourage you to please rate, share, comment, and subscribe.